What's up, everybody? Dave Bartosiak here with another one of Dave's Daily Dives, where I dig into the major market averages, give you a technical perspective on them. Also, I don't leave you hanging. I give you 5 Zacks Rank #1 strong buy stocks that are breaking out from 52-week highs to give you some actionable ideas that you can take a look at. So here I've got the S&P 500. I've been playing off this fib, the May lows, the June highs. It's come down, found support at the 50-day, of course, and I still got this fib extension up here at 2493. We can basically call that 2500, right? And then these June highs here would provide the floor. So you've got the market now bouncing within this tighter and tighter range in between this sort of 2450 and 2493. That's a 40 handle range there, so pretty tight, and we've been there for a couple of weeks now. So I expect this sort of bouncing around to continue as the rest of the market is basically gets all these earnings reports coming out and chopping back and forth. So expect more of the same for the S&P 500. Also with the NASDAQ, which has been a very popular topic lately for pretty much the same reason as the S&P. And here I could do the same thing. I can draw my fib level from the May lows. Whoops, that's not a fib, that's a circle. I could draw a fib level from the May lows up through the June highs, and also draw my extension in the same way. So that 38.2% extension is really what I'm looking at here on the S&P 500, or rather on the NASDAQ. And that's given us a target in the short term. And you can see that we basically ticked that level. That's up there at 64.71. Basically got there, ran out of gas. Now the market broke lower, and still it's just kind of sitting here like pigeons on a stick, really. A bunch of birds on a branch. I can see these wicks have dipped down below that support level. That's a little bit concerning. And today's action certainly isn't a bullish shot in the arm, given the intraday retracement to the downside, but I suppose that's what threat of nuclear war will get you. Here on the NASDAQ, I don't even think that this is a real support level anymore. I think the real support's down here at the 50-day moving average, 62.64. So that's the next leg lower, I think, for the NASDAQ. The last thing I want to look at from a macro perspective is the VIX, the volatility index. So this should serve to confirm your suspicions of a market that's becoming increasingly fearful. But that hasn't been the case, right? Today we got a little bit of a spike in the VIX, but ultimately they closed the day below 11. That's historically very low for volatility. And the last time we had a spike up to 15, it was just an intraday move, and the market gave back all of that. So still, I think if you're going to see these fears in the market, you expect a move of the VIX all the way up to 15 at least. The market down here at 1096 on the VIX, and equities selling off just barely. I don't think that we're too worried about the posturing back and forth between the U.S. and North Korea right now. Now I got 5 Zacks Rank #1 strong buys for you to take a look at. The first being Align Tech. So these guys do the Invisalign, braces basically, and it's been on a rampage since getting out of the hole, breaking through $100 in February. It really hasn't looked back. Hasn't even come down to the 50-day moving average since early February, so that's pretty astounding given that that's made that much of a run that quickly. We are a little bit overbought here on the commodity channel index that you can see here. So one continuation pattern I like to look for is this CCI to come down to the 0 line as a stock is near its highs, and then go ahead and buy that there. You see that worked out pretty good in early July there, but it's a little bit too soon to tell if this is going to play itself out. You do see this big jump here following, I believe, earnings, jumping out from 160. So if you want to chase this breakout, you put your stops below 160, I think you'll be okay. That is Align Tech, ticker ALGN. You may have heard of this guy before, Alibaba, ticker BABA. Pretty much now, what'd you call them, the Amazon of China. Look at the run, leapfrogging the 50-day moving average early in the year. You got this big gap up on earnings in June that still has not filled. I don't know if that gap's ever going to get filled, but that's all the way down at 135. You have the swing low under 150. I'm thinking that the real support would come in at this 50-day moving average down to 142.93. So you may not want to chase it up here in the 160s. May wait for a little bit of a pullback before you go ahead and go long there on Alibaba, ticker BA. BA. Another big name that I'm sure you've all heard of is Caterpillar, ticker CAT. So the heavy equipment maker, several times retracing to the 50-day and finding a bid and coming higher. The big gap up, obviously, so I think you can wait for a pullback to 112. I don't know if you're going to get it back to the 50-day until the 50-day rallies a little bit more. That's Caterpillar CAT. So again, I think I'm more comfortable at 112 rather than chasing the breakout here up at 114. Even within this gap would be a little bit better for Caterpillar CAT. Now, I've never been able to pronounce this company, Chemars. This was the spinoff from DuPont, and they've had a really good run as chemicals have done very well. And if you see here, though, this is a little bit of a head scratcher that in June came down below the 50-day moving average, came under some pressure, very oversold on the commodity channel index, but you got the crossover. That was a buy signal, and they've been running off of that buy signal now, a breakout to new 52-week highs. So you could basically buy here, camp your stops out underneath 44, I think, is pretty safe. And you can chase the breakout here on Chemars, ticker CC. Now, the last one that I'm going to give you here is Unilever, ticker UL. We've talked about this stock in the past. Pretty surprising, you know, a consumer goods, you know, non-cyclical company like this doing so well here in the market. This huge jump up in February is really what gave it a shot in the arm, and the retrace back to the 50-day found support, and now it's still rallying off of that, up at the highs, continually finding a bid. I think this is one you could buy and not worry about so much. You could put your stop south of the 50-day and have plenty of cushion and enjoy the ride to the upside. So that was Unilever, ticker UL. And as for me, if you want to hear more, you can check me out on Twitter at Bartosiastics. And of course, all the stuff I do with Zacks.com, including editing, Momentum Trader, and Home Run Investor. So thanks so much for checking me out on Dave's Daily Dive today. I'll see you all later in the week. Have a good one.